Welcome to Illuminati Silver. We tell you the truth about silver. Today is Friday the 18th of October 2019 and we're continuing with our theme this week of just talking about silver. The last 3 days we've produced 3 videos. Yesterday's entitled The Truth About the Gold to Silver Ratio and Is It Important? On Wednesday, silver's rocket will be financial, not physical. And on Tuesday, silver futures look bright, but when? We've put links in the description box below if you haven't had an opportunity to watch or listen to those video podcasts. Now, yesterday's video on the gold-silver ratio was a long one, and you'll be pleased to hear that today's is much shorter. And today, we're asking the question, is silver a good hedge against inflation? So let's investigate. We have over the years read so many articles, heard so many commentators and viewed so many YouTube videos telling us to buy silver because it's such a good hedge against inflation and currency devaluation. We are often cited that each year the US dollar depreciates somewhere between 2 to 3%, and in the past even more, and thought perhaps we should look at this silver collecting phenomena and see how effective it truly is as a hedge against inflation. So the first thing we did was to say, let's take today's date, and from the info easily available to let us plot a chart showing us what the price of silver was on a close date to this one, going back in tranches of 5 years to as far back as 1970, which is almost 50 years ago. And just to see briefly, and we admit superficially because there are other calculations we could do, how effective silver has proven as a hedge. Now we're going to show a few short videos on this, so let's take a look at the silver price for each of the 5 years from 1970 to today. So, the silver price is as follows. 30th of January 1970, which is as far back as the table goes that we've produced. Silver was $1.91 an ounce. Then 5 years later, well in this case 4 years and 9 months later, on the 8th of October 1974, $4.64. 5 years after that, 10th of October 79, $16.90. 15th of October 84, $7.21. 11th of October 89, $5.04. 5th of October 1994, $5.59. 28th of October 1999, $5.21. 25th of October 2004, $7.44. 22nd of October 2009, $17.55. 21st of October 2014, $17.36. And the 18th of October 2019, $17.57. And if you look at this chart, this is basically plotting it. Going back to 1970, we saw a rise in silver price, hitting now, there's getting close, over $16 here, but eventually, as you know, it goes up to almost $50 under the Hunt brothers in 1980. And then 5 years later, silver falls back, rises slightly, falls back, rises slightly, goes up, down a little bit, and stabilizing the last couple of years. Just thought we'd show you that diagrammatically. So what this video has shown us is that since 1970 until 2019, silver prices have fluctuated. For example, the rise from 1970 to 74, from $1.91 to $4.64, we saw a rise of 141%. And then from the 8th of October 74 to the 10th of October 79, where silver jumped from $4.64 to $16.90. Now remember, we're coming up to the peak the following year of the Hunt brothers manipulation, and that was a rise of 264%. But over the next 5 years, there was a decline of 57%. And then the following 5 years, a further decline of 30%. Then it went up 11%. Then the following 5 years, down 7%. So from 1999 then to 2004, silver then jumped from $5.21 to $7.44. That was a rise of 42%. And then from 2004 to 2009, and you'll notice 2009 was then the start of the economic collapse, or just after the economic collapse, I should say, of 2008, we saw silver rise from $7.44 to $17.55. So that was then a rise of 136%. But then it declined 1% over the next 5 years, and then it's gained 1% since the 21st of October 2014. So let's now use the inflation calculator and compare these prices and as to how much silver, when bought at these various junctures, and I think we've used every 10 years in the video, and to see whether it has dealt with inflation from a hedging point of view effectively or not. Now, using the inflation calculator, we thought we would show you live what the effect on US inflation has on silver prices over the various periods that we mentioned. So what we've done, we've taken 1974, when silver was $4.64 an ounce. And we've said, allowing for inflation, what that value would be worth today. And then we can compare it with today's silver price of $17.57. So when we do this, we enter 1974, 2019. Over that period, we've had 420% inflation in the United States, which means that an item today bought for $4.64, i.e. an ounce of silver, should today be worth $24.17. And in effect, silver is $17.57. So it hasn't really kept up with inflation. So let's now take the next 10 years, 1984. And let's put 1984 in. We'll do it every 10 years to make it easier. And we've missed out the, let's be blunt about it, the temporary bull market for the 1980s, because we know the Hunt brothers manipulated the silver market then. We put in 1984, $7.21. 2019, calculate. So today, that item would cost you $17.82, allowing for inflation. And the silver price is $17.57. So you have allowed for inflation going back to 1984. Let's look at 1994, when silver was $5.59. And we click the calculate button, and we've got $9.68. So certainly over that 10-year period, it has more than kept up with the rate of inflation. So that's 1994. If we look at 2004, and it was at that time $7.44, and we press calculate, it should now be worth $10.11. So yes, again, it has kept up with inflation. Let's look at 2014. And silver at that stage was $17.36. And we click the button. It should be $18.83. So it hasn't kept up with inflation. So it did not keep up in inflation from 1974. It's just broke even in 1984. In 1994, it has exceeded inflation. In 2004, it has exceeded inflation. But it hasn't exceeded inflation from 2014. If we take the original figure back on the 30th of January that we have, which is as far back as the records that we've got immediate access to, we will see, which was 1970, with silver at $1.91, we will of course see that it certainly has kept up with inflation, because silver should be $12.64. The point of this is that much depends on over what time period you specifically look at. We could have been particularly mean and picked the 10th of October 79 when silver was $16.90, and that will have proven, well, let's do it. Let's put it in rather than me say it. If we click 1979 and silver was $16.90, what silver should be worth today based on that should be $59. And of course we know it isn't. We could have picked, which we didn't, 2009 when silver was $17.55. And we type that in, calculate, and you'll see that silver should be $21, and it isn't. Wanted to show you that physically there. So admittedly, on each 10-year period, on 3 occasions it's held up or been better than inflation. On 2 occasions it hasn't. But if we pick certain 5-year periods, it doesn't match with inflation. So the message we have from the figures based over the past 50 years is that in differing 5 and 10-year periods, silver has kept abreast of inflation, and for other periods it hasn't. Much therefore depends upon when you bought the silver, which decides whether it acts as a hedge or not. Now, don't just take our word for it. An article published by Money Metals Exchange on the 5th of June 2018, entitled How Savvy Investors Do and Don't Hedge Against Inflation, spells out to us some interesting information. So let's take a look at that article. Entitled How Savvy Investors Do and Don't Hedge Against Inflation by Money Metals Exchange, it's written by Stephen Gleason, and it's dated June the 5th, 2008. I'm not going to read all of this, but I will sort of cover little parts. Inflation is a corrosive force that gradually and sometimes rapidly eats away at the nominal value of savings and investments. It is perhaps the biggest threat looming on the horizon for millions of retirees who've been steered into assets marketed as conservative, such as dollar-denominated money market accounts, bonds, and annuities. According to the Aegon Retirement Readiness Survey of 2018, an alarmingly large proportion of the population doesn't understand basic financial concepts such as inflation. So they then go down how they conducted their research. And then let's look at this from here. Investors who are savvy about the inflation threat know that conventional annuities, bonds and savings accounts are all vulnerable to losing value in real terms. But those seeking protection from inflation can still run into trouble by venturing into flawed inflation hedges. Think twice before sinking money into the following assets. Now, they mention Treasury inflated protected securities or TIPS, foreign currencies, cryptocurrencies, commodities, and we'll go back to this in a second, gold and silver mining stocks, and numismatic coins. So let's look at commodities. In theory, owning a basket of commodities is a good hedge against inflation. In practice, you probably don't want to store barrels of oil and bushels of wheat in your basement. That means you have to own speculative derivative instruments that often fail horribly at keeping up with the long-term price movements of the underlying commodities. Commodity futures, ETFs, and the like are suitable only for short-term speculation, not long-term inflation protection. Gold and silver mining stocks. Mining companies stand to benefit from rising metal prices, but they're also vulnerable to rising energy, labour costs and political risks, and can become unstable during a financial crisis. As a consequence, the mining sector should be viewed more of a speculation than an inflation hedge. No substitute for physical precious metals. So clearly they're highlighting precious metals are a good hedge, but do not invest in gold and mining stocks other than for pure speculation. And let's look at numismatic coins, because we've been asked this by a number of people. Investors who grasp the need to hold some physical precious metals as part of an inflation protection strategy can still make a big mistake if they buy pricey and illiquid numismatic coins. The large collectible premium attached to numismatic coins is unlikely to rise with inflation or match the gains on spot metal prices. And to be sure, the high-pressure advertisers of so-called rare coins have ripped off countless numbers of hapless investors. Over a period of decades and even centuries, the purchasing power of gold and silver tends to remain relatively constant. Gold is a timeless, immutable monetary asset, still widely held by central banks. And basically, they're focusing more on gold than they are on silver, in truth. But nevertheless, they have mentioned it. And if we look at this part here, for these reasons, gold and its junior partner silver are an indispensable long-term inflation hedge. Now notice the word long-term. We've already shown you that we really had to go back 50 years to 1970 to see a marked increase in the value of silver compared to today's price, although we have had intervening periods. The catch is that precious metal markets don't always track inflation well in the near term. They can suffer large cyclical declines over a period when other asset classes may be gaining. Of course, they can also post huge gains when conventional markets are falling. That's what makes them essential for proper portfolio diversification. And this is the key, and this is something we've always advocated as financial advisors ourselves. The reality is, no single asset protects investors against inflation perfectly. You should be diversified into an array of assets, including blue-chip stocks that have a well-established history of raising their dividend distributions, foreign stocks, real estate, physical precious metals, and perhaps other tangible assets. When the purchasing power of the currency takes a dive, that's when hard assets will shine. And we totally agree with it. To conclude, and hopefully without repeating ourselves too often, our view is that silver can act as a hedge against inflation and/or currency devaluation. However, much truly depends upon the price you pay for it and how long you are willing to hold on to it for. It really is pointless going back 100 years and saying, well, it acted as a hedge for that period. And with respect, it's almost pointless going back 50 years. Unless, of course, you intend to hold on to it and pass it on to your grandchildren or children. Or you start collecting early in life for your retirement, as most of us listening to this are unlikely to hold on to our silver for another 50 years. Now, we collect and use silver as a hedge, but mainly gold, because in Europe, and particularly being in the United Kingdom, we have to pay VAT on silver, and therefore we lose 20% immediately. And next week we shall look at gold in this scenario, but we accept the fact that we may have to hold on to it for a fair period of time, or have bought most of it when prices have been relatively low. Now, if you were unfortunate to have bought silver when it was $50 in the early 80s, you had to wait over 30 years to sell it at break-even or just below. And if you held on to it until today, would be losing 2/3 of your investment. That's not a good hedge or an investment. However, if you acquired it in 1970 or the other periods we've mentioned earlier, then you have covered for inflation. And frankly, and this is the important message, rarely have you made a major capital gain over and above inflation. It has happened, and day traders will tell you they can do it often. But for those of us who buy, stack and store, should accept that we do it with the long term in mind, and if an opportunity presents itself shorter term to make a capital gain, then so much the better. But don't necessarily rely on it unless you've purchased silver at the lower levels mentioned. Now, of course, to appease those who believe we are facing financial Armageddon, and soon, then do acquire it as an insurance or for hedging purposes. But by all means, only do it with monies you can afford to set aside for the longer term. There's nothing worse than putting your money into a precious metal or any other asset for that matter and find that the year after you may have to sell it at a considerable loss. Thank you for listening, and tomorrow we shall be publishing our weekly update. So please do not miss it, and if you haven't already done so, kindly subscribe to this channel, press the bell sign so you are notified of future videos as they are published. Hope you found this interesting, and do place any comments you may have below this video. So until tomorrow. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.